Morning, Market Chameleons. How you doing, Dima?
Good morning, Will. How are you?
Excellent. You ready for another outstanding show?
Yeah. Are you?
Definitely. Let's get right to the disclaimer.
Okay. Good morning, everyone. Thank you for joining us. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. They're there to help answer your questions, provide you with guidance. There's the disclaimer, everyone. And
Excellent.
I think we could get started here.
What are you seeing this morning, buddy?
All right, let me share my screen real quick. So I'm thinking maybe we'll cover the pre-market report really quickly. We'll take a look at a couple of the new reports we pushed out last week with the industry performers and the insider trades, and I think that I'll cover another feature that it's still not out. We're working on it, but let's take a look at it just to get some insights. It'll be on the S&P 500. So with that, let's get started with the pre-market report. These are stocks we're looking at that are trading in a pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm going to take a look really quickly what's going on in the higher market cap stocks. So you know what? Instead of we usually do the higher market cap stocks. Let's just see the S&P 500. So I'm going to filter here by S&P 500. And we see that 4 stocks made the percentage gainers list. There's nothing on the decliners list. Some of these, they're small percentage gainers and not a lot of volume. So I would say, at least from a market breadth perspective, it's kind of neutral there. Let's take a look at the Nasdaq Qtq. Again, four on the percentage gainers list, 1 on the decliners. JD up 3.1%. We got this one, and again, not a lot of volume. 30,000 shares trading against 12,000 PAYX. So I don't see anything really heavy. I think that this week might be anyway a slower week. So nothing's jumping out at me right now. I'm going to unfilter these. Couple small cap stocks we see gapping up in the morning. OCGN, I think we saw that one yesterday up. Might be like on a coronavirus drug. I think this is a biotech. UAVS, that's up 21.8%. Again, small market cap stock. I'm not going to go deep into these today unless somebody has questions, just to cover some of the other reports, which I think, will require a little bit more discussion.
I think someone at OCGN, I'm looking at the top, someone did mention that this morning. I don't know, maybe it was.
All right, let's take a look. So let's take a look. So this stock, you see Biotech Stock, we see $177 million biotech stock, closed at 81 cents yesterday, trading 206 today, up 155%. Volume 83 million shares trading pre-market. That compares to a float of 156 million. So pretty actively trading in the pre-market relative to its float. We see this is how the chart looks like. There is some news on it, so I'm going to let you go. The catalyst news down here, so I'll let you go here, take a look and interpret it for yourself. This is what the minute-to-minute looks like. I don't know if we ever talked about this, but this is a breakdown for each minute, how the stock's been trading. So we see number of trades, total volume for that minute, the VWAP, volume weighted average price for that minute. This is the change from the previous minute. And this is the breakdown, the high and low price in this minute, 846. And this is the last bid ask of the stock of that minute. So if you wanted to see just kind of like how it's been trading and where, in a table format, where the heaviest volume was, and where the VWAPs were, you could just sort all these columns as well. On balance volume, some people look at that. This is basically taking, starting from the morning taking the volume for that minute. If it was down, it will reduce. That will say that was down volume for that minute. If it was up, we'll take all that volume and say it was up, and that's up volume for that minute. So it's just adding up the on-balance volume that way. Some people like to use that analytic. I don't think I ever actually even went down to this table before, but again, that's all our VWAP tables throughout the day. This is the morning one, but you could see those throughout the day. So that's really quickly OCGN. I don't know like what the news is on that. I think it was something to do with the COVID. If there are no questions, I'm going to just move on.
Someone just answered. Could you reiterate what VWAP means?
So VWAP right here, it's the volume weighted average price, and that's really where institutions, when they reference where the price of the stock is, they look at the VWAP, because you could see here 660,000 shares traded in this minute, 846. Well, if 100 shares trade at $3 and 100,000 shares trade at $2, the bulk of the volume was around $2. So a VWAP, volume weighted average price, takes the price times the volume of the trade, right, and sums it all up, divides it by the volume to get a volume weighted average price, right? So something that trades 100,000 shares at $2 gets much more weight than a trade that was 100 shares, let's say at $2.50, right? So when as professionals, usually you're referencing the VWAP price. So even the last price could be 100 shares of whatever at 210, but if the bulk of the volume is at $2, that's kind of the reference price that you would, like mutual funds or any institutions that are doing electronic filling of orders will reference the VWAP price. All right, so an institution that has to, let's say, buy 100,000 shares or a million shares, they don't send it all to the market at once. They'll give it to like Goldman Sachs, Knight Capital, whatever, and say VWAP me into this stock, and they're going to follow the VWAP price and slice up the stock. Does that help?
Yeah, that's great.
Any questions? So these are the VWAP prices minute by minute. This is the VWAP total VWAP price in a pre-market. Okay, so that's $1.87. This is the last one, $2.05. Then you got the high, low VWAP for 1 minute over here. The size $2.23. Low is $1.22. This is the standard deviation of the VWAPs. So about, you could see up and down 25 cents from the current VWAP. That's one standard deviation. Here you just have the bars where the biggest the bulk of the trading was 17 million shares between $2.06 to $2.14. So this is just kind of a breakdown to see where the biggest VWAP bars are. If there are no questions, I'll keep moving.
Yep, you can move forward.
Okay.
We have Jake 44 on today, Dr. Chameleon. So he jumped over knowing that you're going to show features that no one's seen before, which he's very excited about. Yeah,
I will. I'm gonna get into, and actually Jake might like this because he'll be on the ETFs. So working on the fundamental, again, we didn't push this out yet. I'm still validating data, trying to put it together so when we push it out, it makes more sense. But I'll take a look at it today just to get some insights.
Cool.
Before we get to that, let's take a look quickly, performance by industry. So these here, this is a report that's broken down by industry. This is the name of the industry, the number of stocks in that industry, the number of stocks yesterday that were up. So the number of stocks, percentage of stocks that were down yesterday, and this is the median return for that group. I'm just going to sort this really quickly by biggest percentage gainers. So we see solar, that's been making the list, already a bunch of days in a row. 18 stocks in that group, 94% of them were higher yesterday, 6% lower. Utilities, renewable energy, 14 in that group, all of them were up yesterday. Median gained 2.7%. Health information services, 89% of those stocks were up yesterday. Median return 2.2%. Recreational vehicles, uranium, consumer electronics, that's going down the list. So if you wanted to just see which stocks are in that group, hit that little open button. Then you get a breakdown of the stocks in that group. You could sort it by biggest percentage gainer. And then you get all these other stats, how it performed in the last 2 weeks, 3 months, 6 months, 1 year. And then you got a little snapshot of the fundamentals. So,
and you got to wonder with these solar stocks, I mean, just how much money the Biden administration is going to put into, that sector. It's people are betting incredible amounts. I mean,
you could see so far, if their gross margins are not that high, 17%, I would say that's on the low end. But in the last 5 years, the revenue growth, 24% on average, that's pretty good. I think that's, at least that part looks good. Price to sales, they're almost 3 times price to sales. I'll show you what the S&P 500 is. PE probably doesn't matter, 95, but if you're looking at revenue growth, let me just see. I'm going to sort by revenue growth. So look, I just sorted by the highest revenue growth, right, in all these industries. And this is the one that popped up top, solar. Next one is internet content and information, real estate development, recreational vehicles, 15%. But you could see, like, if I go 1, 2, 3, 4 down, you're at 15%. This is 24%. So it does have that going for them.
Yeah, and you would think the revenue growth would be even higher going forward.
That's what the bet is, right? Yeah. If you just sorted by highest revenue growth, that made the top of the list. These are the ones at the top of the list. People are, obviously people are looking at them. Let's take a look at net income growth to see who's the highest. So shell companies, I'm not sure about. I got to check that.
Well, I think what the shell companies are these SPACs, right?
Yeah. Not sure. Like, that seems suspicious to me. Let me just open it up. There's 390 of them, so a lot of them don't even have revenue. So if you take the median price, there's probably just a couple of them in there. So, there's only 3. That's why I got to open it up. There's only like 3 that even have net income. So I don't. You have to take a look. That doesn't seem right, but look, biotech, at least the net income growth looks pretty good, and their gross margins are good, right? But this is one way just to kind of really quickly, just go through it and see what's going on by industry. Let's move on. If there are no questions, I'm going to move on. I want to show insider trades, and then I'm going to start showing the new feature.
Yeah, BMO Beach just shouted out Market Chameleon is awesome, which is always nice. Haven't said it in a couple days. If you think it's awesome, a couple thumbs ups, always appreciated. If you're new to the channel, make sure you subscribe. I haven't been saying that very often either, but make sure you subscribe to the channel. You get alerted to all the new videos, which is a real nice feature.
So this insider trade, we did make updates. We're trying to get it more solid. Because this is a relatively new feature. Again, these are trades. These are SEC Form 4 filings that insiders have to file with the SEC. They have something like 5 days after the trade to do the filing. And we go out there and get it from the SEC. We try to parse it. And there's lots of information there. You do have to go to the link to read those footnotes and figure out what's going on. But, we, from at least on the top line, you can filter it before you go to that SEC filing. So I'm going to look for, let's look for insider trades that were $1 million or above in notional value. So this, at least $1 million worth of stock in the trade. For the form of ownership, I'm going to say it's a direct. In other words, the person who bought it, they're directly buying it. It wasn't like a fund that they're investing in that makes the decisions. That this insider filing didn't have a derivative. So I'm going to say that's false. In other words, that this trade didn't result in because they converted some option or some stock employee compensation or convertible bond. It was more likely just a straight purchase of stock. Let's set this to false as well. I'm not going to explain. This is harder to explain, but I'm just going to do that later. I'm also going to say that the price that it traded at was inside the range of the day's high and low. So the reason we're doing it is like sometimes they do a trade, it's outside the range, and then you go in or read the footnotes, and it's because, well, they bought it at this average price because they agreed to some volume weighted average price, and there's other stuff going on. So really what we're looking at is like somebody who most likely just went in and bought the shares at the market, right? That's what we're interested in, buying shares at the market. So I'm going to say that that price that they traded at had to be within the day's high low. So most likely, it was a purchase at the market.
Hey, D, real quick, can you just show again how you got to the insider trade screener?
Okay, so it's stocks, and then I go here, insider trades under screeners. All right, some of these reports you guys don't see because they're just my internal ones, but right here, insider trades.
Perfect.
So I set these filters, as you can see here. So let's take a look at buy. And I'm going to look for more, let's see, most recent. So most recent is like within the last couple of days. So here are 4 buys in the last couple of days with $1 million worth of stock or more. So we got JKHY. This is the company name, Jack Henry and Associates. This is the owner. He's direct owner. I'm sorry, he's a director in the company. The trade date was December 22nd. So that was yesterday. He bought it for $156.35. It fell 1% since then. He bought 8,900 shares for a total of almost $1.4 million worth of stock. And this is the filing. So if you click on it, you could go there. This is the SEC filing. And you can see here, bought 6,000 shares at this price, 2,900 shares. See the footnote over here at this price. This is the total amount he has. And again, you need to read that to figure it out. It looks like he bought it. It was based on multiple transactions. So this is the average weighted price. I'm going to close it. Let's see the other ones. Foot Locker. We talked about this. Nike. Remember, Nike did pretty well.
And we were also talking about the collection of shoes, how it's like a real business. People trading and collecting.
And shoes. And that sector, it looks like it's been doing really well. And like I told you, I'm hearing all these people all of a sudden collecting these new shoes that are limited edition. People are buying them, holding them in inventory in their like basement, and then flipping them 6 months later for profits. Anyway, Foot Locker, 2 trades here. Looks like December 21st, December 18th, December 21st, bought the stock $38.78. It's up 1.2% since the transaction, 108,000 shares for over $4 million worth of stock. This is how much the holding was afterwards. December 18th, they did also a buy, $38.94, similar price, up 0.8% since then. This is the amount of shares they bought for almost a little bit under $4 million worth of stock. MRUS.
Now with that Foot Locker, if I were, since we've talked about it twice, and I know they've probably been beaten down because of the coronavirus, and I wanted to put on a bullish position, but wanted to do it maybe with a credit spread or something. Can you walk the chameleons through how you would go the next step?
Yeah, and it is kind of like close to the 52 high. Here's the range: 1746, $43.07, 52-week high. It's close to $40 right now. Yeah, I'm gonna get to it. Let me show the new feature, and then I'm gonna show that. Okay, MRUS. Also, that was on December 18th. Let me see really quickly what they do. Biotech company. All right, it looks like it's up 10% actually in the pre-market right now. Biotech company, 10% owner, December 18th, bought it for $16.05. Last price $17.05. Yesterday's close up 6% since that trade. 160,000 shares. That's $2.5 million worth of stock. 3 million shares held after the transaction. So that's really quickly from the buy side. Foot Locker, let me do that one really quick. So Will was asking, well, if I was looking for kind of a bullish trade idea, I'm going to go here to the summary. This is Foot Locker. You could go to trade ideas if you want to use, like, see if we were able to scan. So here's one long call. It filtered out, buying the December 31st expiration, 39.5 call. It was 87 cents. We think it's worth $1.03. Theoretically, that's an 18.6% theoretical edge with a historical probability of success 34%. Let me see if there's a bull call spread. There's a bull call spread. Buying the 38.5 call December 31st, selling the 41.5 call December 31st for $1.20. We think theoretically it's worth $1.35. That's a 12.1% theoretical edge. Historical probability of success 52%. I'll do one more bull. Let's see if there's a bull put spread. So bull put spreads, there's more of those. Let's take a look at these. So here, selling the 35 put January 15th, buying the January 15th 33 put for 23 cents. We think it's worth 3 cents. So that's 11.2% theoretical edge with a 97% probability of success. Maybe let's take a look at this one too. So January 15th expiration, selling the 37 put, buying the 34 put. It's a $3 put spread for 61 cents. We think theoretically it's worth 25 cents. That's a 15.2% theoretical edge and a historical probability of success 86%. So that's really quickly Foot Locker trade ideas.
Very cool. Question. Thank you.
So now I'm gonna go into the SPY, and keep in mind this right now. I'm still working on it. This is what you're going to be looking at. You're only seeing this on my internal one before we push it out. It's not going to be even under the same tab. But the idea is to take a look. We know that the market has been going up, and we want to see on a multiple basis how far has it gone from its historical averages. So what we're doing in here is we're taking a look at the holdings in SPY, S&P 500, and I'm going to come down here to the summary, and we're going to say that if we added up all the earnings, right? So we took all the stocks in there, Amazon, Facebook, whatever. We summed up all the earnings in aggregate, and then we took all the market caps, like divided market cap by total earnings. What is the PE, right? And we did that for price to sales for all of. So we see the current PE 35.19 of all the holdings in S&P 500. That compares to 3-year average of 25.57. That's 2.1 standard deviations above that 3-year average. If we compare it to a 5-year average, 24.92, almost 3 standard deviations away from that 5-year average. So you could see, that's about a 40% premium to the historical average. Again, right now we've got stimulus after stimulus getting pumped up, Fed's pumping in money. So we're really this is like a liquidity driven rally. And I'll show you what I mean by that. Price to sales right now. So this is saying what is the multiple of the market cap over the total sales, right? Just the total sales, 2.77, or total revenue, 2.77. That compares to 3-year average, 2.41, 5-year average, 2.3. So we see we're over 2 standard deviations away from that historical mean. Price to cash, we're below. So it does look like, at least as a multiple to cash on the books, that looks like it's below the historical averages. And I'm going to give you some more insights, but in other words, that there is more cash being raised right now on the books. This is price to book value. So right now we're nearing $13. So the market cap versus the total book value, or the book value, you could think about it as if all the stocks just had to close and sell everything, and pay off their debt. What do they have left over? The book value. Right now it's $13 above 13 times its book value. That's the multiple. That compares to 3-year average, 11.36, 10-year average, 10.6. So we see we're about a little bit over 1.5 times its standard deviation. This is price to EBIT. So this, instead of taking just the earnings, what we do is, this is earnings before interest and taxes, right? So this is how much they earned before they paid interest and taxes. So price to EBIT, 27.62. That compares to 3-year average, 20.75, 5-year average, 19.85. So we see we're over 2 standard deviations above that. This is same thing, EBITDA, that's earnings before interest, taxes, depreciation, and amortization. So a lot of people use these instead of the PE. Again, we're over 2 standard deviations above there. Gross margins, right now we're at 31.6, which is a little bit below the 5-year and 3-year average. Net margins looks like they're a little bit below the 3-year and 5-year average. Then you got debt to equity, debt to cash, debt to EBITDA. Let's take a look at growth. Total revenue growth in S&P. Look, 5-year average been 4.3, 3-year average 4.2. That's average per year. But the last year, we're down. Revenue's down. Net income last year down. Gross margins down. So you see, our growth is not being driven by revenue or earnings. It's like pure liquidity here, just money getting pumped in. Total debt up a little bit. Assets are up here. Cash and equivalents, those are up the most right now. So whatever it is, maybe a lot of it is just being raised. It's cheap money. Maybe they're borrowing money. I'd have to look deeper into it, but they could be just borrowing cheap money, putting cash on the books, whatever it is, or they're just not investing it as they did before. These are the S&P 500 stocks. So one thing we could do is just say, like, well, which stock out of these S&P 500 has the most net income? Let's just say the most net income after income, after they pay for the expenses. So the highest net income, we see Apple, then Microsoft, Berkshire Hathaway, which that was surprising to me because Berkshire Hathaway is just like they're just owner of different stocks. Google is next, JP Morgan, Facebook, Intel.
Remember, they actually own companies too.
Right, they own companies. So they're probably a benefactor of some of these big ones. They own Apple and maybe some of these other bigger ones that generate a lot of net income. Let's take a look. Who has the most cash on the book, right? So maybe for like acquisition purposes. So I'm going to just sort it here. Now, a lot of these will be banks, and that's the business model. They have to, right? They have cash because that's what they use as leverage to lend out money and so forth. So let's just take a look beyond these banking companies like JP Morgan, Citigroup, Bank of America, because this is expected. GE has a lot, but they have a lot of debt. But look, Apple, right, is up there right after the banks. Amazon is up there. Oracle is up there. Charles Schwab, but they're also kind of in the financials. General Motors has a lot. So
General Motors have a lot of debt as well.
They might have a lot of debt. We could take a look, but they probably do have, you know, I think that their debt. Well, I don't know. They did get bailed out at one point, and it cleared out all their debt. And wasn't there like debt forgiven at one point?
Yeah, I think the share. Yeah,
huh?
I think you're right.
They went like through this whole reorganization. I'll take a look. We could take a look at it, but let's just stay on this report because we were at 9:30. I'll come back to it, but just wanted to show really quickly, you know, some of the insights. Anyway, 9:30. I'll let everybody go.
Well, D, great job. Thanks as always. People are loving the new features and the Chameleon in general. Thanks for joining us, everyone. Everyone have a safe trading day. Thanks, D.
Thanks, everyone. Hope to see you tomorrow.